Well, welcome traders. Good morning to most of you, but I know we typically have some people calling in from all over the world, so different time zones. So just welcome, and I'm glad everybody is here. Really looking forward to this. I haven't done this Saturday scanning in several months. I think February was the last time I did it, and it's always fun to look for great trades and have people join, ask questions, and just participate. So I think it's going to be a good session. The market is interesting as always. So make sure you can locate the chat box so you can ask questions, make comments as we go along. So in the Zoom platform, there is a chat box. So do make sure you can locate that and go ahead and why don't you type in where you're calling from, what city, what state, what country. And a couple folks already started. Hey, Bob from San Diego, Scott calling in, Nicole's from Atlanta. I'm calling from Olympia, Washington, just south of Seattle, here in Washington State. And man, it is a beautiful day, beautiful time of year. Second day of summer, right? So probably nice where most people are at. Manish, Houston, Todd's in Minneapolis, Johnny's in Raleigh, North Carolina, Scott's Colorado, Jeff's calling in from Costa Rica. Hey man, Ken from San Francisco, Daryl's from Ocala, Florida, Jean's in Boston, Dan from the Cayman Islands, very nice. Merwin from North Carolina, Tim's in Indianapolis, Guillermo, Austin. You getting warm down in Austin, Guillermo? Greg's from Siler City. And GJ is calling in from Lakewood. Yeah, just a half hour up the road there. Welcome. Ron from Sun City, Todd's Delaware. Bill's in Rancho Santa Margarita, Southern California. Guillermo said, yeah, it's getting hot in Austin, I'll bet. I was talking to somebody from Houston, man, in June. By the time we get to June in Houston, man, it's cooking. Hey, Michael's calling from Tacoma, just up the road, another neighbor. Bish from Pasadena. All right, very nice. Well, once again, welcome to followmetrades.com Saturday Scanning. And we're going to be looking for some great trades. So let's go ahead and get this thing going. Dubai. Barack's calling in from Dubai. Very nice. I got another customer in Dubai. Can you believe that? Who would have figured, right? Scott from Jacksonville. All right. Hey, so Michael heard about me on the radio on Spirit 105. Awesome. Yeah, I was running ads on a local radio station in Seattle. Glad you heard and you're here. All right, we're gonna be looking for trades, right? But finding great trades it's like a needle in a haystack, right? There's over 8,000 stocks that trade publicly on the US indexes. Then there's ETFs and other instruments. And so it can be hard, with that can be daunting. Out of all those, what's the best candidate to go trade? So let's try to make this a little bit easier, right? We're going to find a few needles in the haystack. I have some tools we use, kind of like a magnet, right? To go suck that needle out of that haystack, try and find it. I'll show you how I do it, and I'm going to share the trades that I find, and I'll extend an offer at the end, so you can continue following along if you like what you see, if you like the method I'm using and some of the trades I find. So stay tuned for that. Quick disclaimer, I am a trader. I'm not a financial advisor, and I'm not giving financial advice. So I'm going to share what I do in the markets, how I look for trades, the setups I'm looking for, how I manage them. Whether anybody acts on that information, of course, is the decision of each individual. Only you know what's appropriate for you. So I'm going to share what I'm doing. Each person makes their own choices. I'm not giving financial advice. I don't know your circumstances, so only you can make those decisions. All right, sound fair? So, introduce myself. I know some folks on the call are existing customers. Some folks have been in other webinars and know me, and some people it's your first time. So let me introduce myself, and I will flip on my camera here real quick. So hello, I'm Dean Jenkins, founder of followmetrades.com. And I've been trading, investing in the financial markets for over 25 years. Really started when I went to work for Intel Corporation, and they gave us stock options and an employee stock purchase program, and I joined in '93. And doubled and split and doubled and split like clockwork. And pretty soon I said, wow, there's really something to this. And got my attention, got my interest, and I began, that was the run up to the .com thing, and I started buying in, different stocks and did okay, did this and that. I went and during that time got my MBA from the University of Washington and learned how to do fundamental analysis, earnings statements, financial statements, ratios, all this stuff. And man, I was cranking out spreadsheets on companies and doing all this research, and it ultimately was frustrating because you get this great company that looked good, and then a new report would come out and it would tank because it wasn't good enough, and you have a company with bad news and it would go up because it wasn't as bad as people thought. And just try to second guess all that. It was very inconsistent, very frustrating. I totally gave up for a while in 2007. So I got really lucky. I just took my money, went to cash, and was, trying to figure out what to do. And the crash happened, and I was lucky. And then, but I couldn't stay away. It was too intriguing. I knew the potential was there if I could just, get a system, have a disciplined, kind of methodical approach to the market. So I started getting back in, and I got kind of lucky. I got into Bank of America and a few others that, had tanked, and I found out it was even more stressful to be winning, right? The thing's up, 200-300%, and then I didn't know what to do. I finally got interested in technical trading, which is analyzing stock charts and patterns, using some tools to look for patterns in the stock market. I started that journey in about 2010, and went down a lot of wrong paths. Bought this course, followed, checked out this mentor, had some false starts. Finally, got on the right path with a really good mentor, Bennett McDowell from Traders Coach, and then finally in 2012 settled in on the system I'm using today. I've made some tweaks, but the core of my system I had developed and was using in 2012, and turned the corner to becoming a consistently profitable trader. And in 2015, I launched Follow Me Trades, the company that I run right now. And it really started because I was talking to other traders and kind of saying, hey, here's what I'm going to do. What are you going to do? And some people started noticing and said, hey, let me know before you take a trade. And I ended up setting up a subscription service and ultimately then some training courses, and because lots of people started getting kind of interested in what I was doing. So that's my story. And again, howdy, welcome. I'll turn the camera off now so it's not a distraction. Okay, so that's me. That's my introduction. I do have a website, and it's called followmetrades.com. No surprise, name of the company. Here's followmetrades.com, and here's I believe in complete transparency in my results, for people considering being customers, just existing customers. So I show my results every year. I contrast those to the indexes, and so far every year I've beaten the indexes. The indexes are pretty strong this year. We'll see if I can beat them by the end. We'll see. And then, so that's a summary. And then, if you want to see the details of every single trade, there's a detailed sheet here. I list every single trade, what price I got in, what day I took it, whether it was a winner or a loser. Not every trade's a winner, but overall we're profitable. I give my statistics here, and these results of these trades are audited. So, and several of my customers are online. So if I say I'm doing something that I'm not, they would call me on it. But I'm doing what I say I do. And I have a CPA firm that audits whatever I put on the website. I send them every quarter my brokerage statements, and they check and see if what I said I did on the website is what I actually did. And of course I am. But it's nice to have that verification. So that's, a little bit more about me and the company, the website, and the results I get. I'm not claiming anybody's going to get rich. I'm you see some ads probably on the net, somebody sitting next to a Lamborghini, and I started with 5,000 and made $1 million in 6 months. Come on, that's not real. But knocking out, about 25% per year is a pretty good result, and that's realistic, and that's what we're doing. All right. So here's how we're going to do things for this session. I'm going to explain the trade setups that I'm looking for. And then I'm going to walk through my scanning technique, how I go try to find that needle in a haystack. And I'm going to find some great trade candidates. And then I'd be happy to take a look at any stocks you're interested in, kind of run it through my criteria, my analysis, and offer you, my opinion on that. Again, you ultimately have to make the decision, but I'll offer my opinion on what a particular chart looks like. Who knows? I may love some of your ideas. I often get trades, from that. And then I'll summarize kind of what the candidates we found, some actionable trades for next week. And if you want to follow along next week and beyond with my trades, which ones I take, so how I do them, I'll make you an offer to follow along, with me if you like. So stay with me if you want to get the most out of this time. And we're going to go pretty fast, jump in with questions as we go. And I like, I got a book of quotes, the 1,000 best quotes in the world or something. I read it over and over. I just love to hear what, interesting people had to say. Benjamin Disraeli said about success, the secret is to be ready for your opportunity when it comes. And so I think that applies to the market, right? You got to know what you're looking for. You got to do some homework and be prepared and, set up some, kind of criteria. Go, if this happens, then I'm going to do that. And that's being ready. And Louis Pasteur said, in the field of observation, chance favors the prepared mind. So you got to put in a little work and again, do the homework, know what you're looking for, and then recognize it when you see it. So that's the key. And those are some fun quotes. All right, here's what I've learned over my journey, several years in investing and trading, and going down some wrong paths, making some mistakes like most people have. Here's the, regardless of whatever system you use, whatever indicators you use, right? I think these are global things that you have to have if you're going to be profitable, consistently profitable. Everybody can win once in a while. But if you're going to be consistently profitable, you need a plan, and you need these three things. You need trade setups, great trade setups that have a high probability outcome, greater than 50%. Right? You got to be like the casino and have an edge, right? It can be small, it can be 2%, 52 to 48. But you got to have an edge in the market, and that comes through great trade setups, patterns you're looking for, and you have to have a good reward to risk ratio. That means the trades that are going to win have to win bigger than the ones that lose. You have to have risk management. So you have to control risk. So when a trade does lose, and some are going to lose, it has to be a manageable, tolerable amount. So, if a trade goes wrong and it's pain-free, right? You lose an amount that is controlled and is acceptable and not a setback, then you're in good shape. And then you have to have a way of managing trades. That's different than risk management. It's when I'm in a trade, what are the moves I'm going to make? When am I going to take profit? And when will I exit the trade? So you have to have that pretty well choreographed and scripted ahead of time, because if you don't, then emotion's going to take over and you'll more than likely make mistakes. So it's all about having a plan and then following the plan. And if you can do that, and the plan includes these things, you got a pretty good shot at being successful in the market. Hey, Leo, good morning. You must be calling in. Forget where you're from, Leo. I know Leo's an existing customer, but I forget where you reside. And Janky says, can you get the archive? Got to leave. Yeah, we're recording this, and if the technology works, I'll be sending out a link to the recording later on. California. Okay. California. Hey, Miles joined. Good afternoon. Good morning. Still morning in Florida. And Miles is in Florida. All right. So here's the tools that I use. And then I'm going to walk through the setup I look for. Right. I use Dow theory, which is written by, created by Charles Dow back in the 1890s. He's the founder of the Wall Street Journal. And he wrote a series of articles, editorials in the Wall Street Journal about how markets work. And that's now called Dow theory. They're collected into books. So I use a portion of Dow theory that really just talks about trends and how you can tell if you're still in a trend and when it's ended. I use Ichimoku Cloud, which is an indicator developed by Hoichi Kasada in the 1930s. And it's a really interesting and different way to look at moving averages. I use Elliott Wave, which was developed by Ralph Nelson Elliott in the 1930s and is still cool today. And I use a very simple, repeatable version. If you've seen Elliott Wave and you saw some complex thing and you're rolling your eyes, don't worry, we use a very simple version of it here. We're just looking for impulsive moves, corrections, and then continuations. So overriding criteria, like I said in my plan, high probability outcome and a great reward to risk ratio. So here's a quick look at Dow theory. It just helps analyze a trend, right? When an uptrend, according to Charles Dow, is higher highs, higher lows, higher highs, higher lows, and on. till it doesn't do it anymore. Downtrend is lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Right? Well, that's helpful because when you get into a trade and it starts going up, you go, oh, when it's great, and then it starts pulling back, and you start, you know, kind of biting your nails. Go, what do I do? What do I do? It's good to know that that's normal, and that unless it goes below that prior low, we're still in that uptrend, and the same thing, right? So an uptrend begins when you get 3 data points, a high, higher, low, new high, and you're still in that trend until you don't put in new highs and you go below the low. So we can't predict what the absolute high is going to be, but we can get out when the trend has changed. Okay. Same thing with the downtrend. A low, lower high, new low is the beginning. And when it no longer puts in new lows and starts going up, taking out prior highs, trend is over. Time to leave. And I use this to manage the trades as well. So when I'm in a position, I watch this price action. I use it to set my stop levels and to trail my stop levels. And then I use it to exit the trade. So Ichimoku cloud is an interesting indicator, and you can see it on my screen here. What I'm really interested in is this shaded area. You can see it's green in an uptrend, it's red in a downtrend. So Ichimoku cloud, again, uses a different formula and some different periods to look back and create essentially moving averages. It's different than simple moving average, exponential moving average. I won't go through the math today, but suffice to say, it uses a little bit different math to create moving averages, and then it, you know, just like any 2 moving average system, right? What you look for is crossovers, and this region between a faster moving average and a slower moving average, it really predicts a support area, right? So we interpret this when price breaks through the cloud. That's a pretty good indication of a trend change, and then it is showing predicted areas of support. So as price moves in an uptrend in higher highs, higher lows, higher highs, it predicts where those higher lows are going to reverse at. So it's helpful. When we take a new entry, we like to see it break through the cloud. When we're in it, we like to see it be supported and predicted. And then when it breaks through, you know, and the trend changes, we want to get out. And, you know, again, it can predict with pretty good accuracy what the support levels are going to be. And the thicker the cloud is, the stronger the support. And as it gets thin, that's where breakthroughs and trend changes typically occur. Pretty cool thing. Hey, Paul's joined. Walter's here. Good morning. All right. So I mentioned Elliott wave theory. I use that. And again, it was developed back in the 30s by Ralph Nelson Elliott, same time that Goichi Hisada was developing Ichimoku cloud, interestingly. I don't know if they knew each other or of each other's work, but same time frame, and they still are absolutely viable today. So what Elliott said was, hey, it seems like price moves in waves, and that there's a collective investor psychology of optimism and pessimism that moves in natural sequences, and you can observe it, and it's really cool. So here's the idealized basic 5-wave pattern where you get an initial surge of optimism and a little pullback, and then everybody comes, and this is the big move. This is an impulsive move in wave 3. And then after a big impulsive move, there's a correction into wave 4. And after 4, the optimism returns, and there's another impulsive move. And then afterwards, there's this complex correction. Okay, so I only tried to trade 3, 4, and 5. I'll trade a big trend that is beginning, nice breakout. If there's enough profit, I'll trade a correction. And then after the correction, the favorite one is wave 5, because you've got this history, this pattern of 4 waves conforming to some rules. And there are rules about how deep these retracements are, and, you know, what constitutes a wave 3 and a wave 4. So once you see patterns falling into this mold and following these rules, then there's a pretty good chance it's going to continue to follow it. And so we look for that. I think one of the things that frustrates people when they hear about or try to apply Elliott wave to charts is that there isn't an Elliott wave pattern on every chart. In fact, finding a clean Elliott wave pattern is kind of rare, right? I'd say if I look at 15 charts, I'll find 1 or 2 that are actually really clean setups, and the rest just don't conform. That's okay, because if, you know, 1 or 2 out of 15, we extend that to the whole market, there's plenty of trading opportunities, plenty of good charts to go find. Okay, but that's a mistake people make, is to try and superimpose an Elliott wave pattern over a chart that just doesn't have it. And well, it's a mistake, and it's frustrating. All right, moving along. Risk management. So I mentioned that this is an essential part of a trading plan. You just have to, right? There's no choice. If you're going to be successful at trading, and I bet people could raise their hand and say, yes, I have learned this the hard way, right? That some trades are going to lose. And if you don't determine how much you're willing to lose and control it to that level, bad things happen, right? You can lose an amount that you would find to be unacceptable, and it's a big setback. So we're in charge of our trading. We're in charge of the actions we take, and we can determine how much we're willing to lose on a trade, set that at a pain-free level. I use 2%. So 2% of my account, and that's not 2% of capital in a given trade. It's if the trade goes wrong, I don't want to lose more than 2% of my account. That's a level that I'm willing to lose. Don't want to, but I'm willing, because it won't be a setback. And we determine that by position size. We have to, when we look at a chart, determine, we know the price we're getting in, the entry price, right? And we have to determine the price that we would get out where the trade would have failed, right? And then we calculate how much we would lose at that point, and that determines our how many shares or contracts to trade with, right? Hope that math makes sense. It's simple, right? If I got a $100,000 account, then 2% is 2,000. I take my stop minus my entry, divided into 2,000, gives me the number of shares to trade. So it comes up, that formula gives you the loss per share, and you multiply that, and you go, okay, if it fails and it hits the stop, right? I'll lose $2,000, and it'll be a bummer, but I can tolerate that on one trade in a $100,000 account. And let's see, I'm going to catch up here on questions. Jeff, do I use Fibonacci numbers to determine levels? Yeah, I'm going to show that in just a minute. And Jeff, oh, so Jeff made a comment, unsolicited plug. And he just learned, he tried Fibonacci, Elliott wave, he was reluctant, and he joined my service about 8 months ago, and says his eyes were open. Well, that's awesome, Jeff. Thank you for that nice comment. When we use it correctly and we use it in a simple way, I think there's some real power to it. Okay, risk management, position sizing is critical. It's critical. Okay, and I say at a stop level, I know some people are reluctant to use stop loss orders. They think the market makers are out to get them, and they go hunting stops, and they're going to go hit your stop, and then cackle and run off, and you're going to get a loss, and it's going to go the way you thought. Whether that's true or not, a stop level is simply a level that you've predetermined you will get out at. So it doesn't imply that you have to have a stop loss order, sitting on your broker's server. It implies that there is a price level that you have determined you will get out at, and then you actually get out at it. Okay, so I don't have to have a debate about whether you should have live stop orders or not. You have to have a stop level determined and act on it. All right. Trade management, you can get into a great setup. You can have good risk management. You can still lose money by mismanaging the trade. So you have to take profit at the right times. You have to add to the position strategically. Doubling down is a lousy strategy. It's great in blackjack. It's lousy in stock trading. You have to stay with the winner for as long as possible. You got to let your winners run. You have to have your winners be bigger than your losers. That math is so important. Right? Because some trades lose, and we'll go through periods where, maybe the market's turning, we were bullish and now it's turning bearish, or we were bearish, it's turning bullish, or it's going sideways and it's just a little difficult to catch, big moving stocks. So we'll go through a period where we get 2, 3, 4 losers in a row, right? And so at the end of the year, we can end up with a 60, 70% win ratio, which is fine if our winners are bigger than our losers. If our winners on average are double the size of our losers. So if I lose $1,000 on average on a losing trade, and I make $2,000 on a winning trade on average over the year, right? If I only win half my trades, I'm going to be a very profitable trader. But I have to make that be true. And the way I make that be true is only taking trades with big potential and then letting them win, not jumping out of a trade. One day it jumps up 5% and it's nice and it feels good, so we just close the trade. It's a huge mistake, because you have to let it run out to its potential to have good trading statistics for the whole year, or whatever a quarter or half of your year, whatever period you're measuring, right? It's not about one trade. It's about your trading system. That's where consistent profitability comes from. And you have to exit the trade at the right time. Okay. So you can see I trail my stop, and I showed you it's using Dow theory, right? I set my initial stop level, you know, high, higher, low, new high. I set my stop at that higher low, right? And then as price plays out, higher high, higher low, new high, I trail my stop to these support levels. It's a level that price came down to and didn't go through, right? And I just keep trailing my stop until the thing changes, and then it ultimately hits, you know, the last stop, and I close the trade. We can't predict the top, but we can know when the trend has changed. So this is a real trade I took on Vail. You know, this is wave 3, this is wave 4, you know, and then we got back in for wave 5, took it long again, and just kept trailing our stop up, right, and managing the trade. Taking profit, I take it out in thirds, right? When we hit key levels, I take it out in thirds. And Stig says 2% of account or deployed capital normally don't deploy more than 50%. I limit, so 2% is the amount, the tolerable loss per trade. I limit 15% of account capital in any one given trade. So 2% loss max and 15% of capital in any given trade at any given time. I'm willing to deploy 100% of the capital across multiple trades, and I'm being careful about, you know, sector exposure and stuff like that. So it's good. Here's a trade we took on Canopy earlier this year. It was great, and you can see we took an entry. This blue line is where I enter a trade. You can see what I'm looking for is a confluence of things. So this was a big Elliott wave 3. This was a 4, and then there was evidence that 5 was starting because we had higher highs, higher lows, higher highs, higher lows. We had positive momentum. And right as it broke out of the Ichimoku cloud, remember I said I want to see breakthroughs, right? And the cloud got really thin. So we took a break there, and we, you know, a couple days we had a big gain. This thing ended up going up more, and then finally we got stopped out for a nice win. So that's exactly how we do it. And Jeff, nice pun. He says good gain on an Adobe trade. Yeah. Yeah, and we're actually looking at the sector again. It looks tempting. It's just not quite there yet. Okay, so here's how I scan. So I just went through all my criteria for a trade, right? You know, the tools I use, the criteria, and we'll go apply that to some real charts, right? So we get out of the theoretical realm and into the reality. So when I go scanning, here's what I do. Here's how I take that haystack and go find the needle. First thing I do is create a big picture review. Just go, what's going on in the world that affects the financial markets, right? What, you know, what's happening with the indexes and with major commodities, and you know, what's the current picture? And then I create a thesis. I go, here's what I think is going to happen next. Now I could be wrong. Now, a thesis has to be proven, but what it does is gives me a portion of the market to go examine. And then I use some tools in that portion or sector of the market and get it down to a very manageable list. And then I go look at some charts. Right? I can't look at 8,000 charts. I don't really want to look at 100 charts. I want to look at, you know, 15 to 20, right? So by creating a thesis, narrowing it down to a manageable list, using some software to filter that further, I end up with a manageable number of charts to go look at. So let's talk about the big picture. What's going on right now in the market and in the world, right? Well, the China trade deal is still up in the air, right? And that's the big deal in the market. It's the biggest deal. And there's nothing planned until the G20 summit in late June. So nothing's going to happen until then. Tensions with Iran continue, and that, you know, it's affecting energy and causing some, you know, nervousness. You know, are we going to war, or what's going to happen here? That could be very disruptive. The indexes, S&P 500 put in an all-time high last week, but now it's showing some weakness, and I'll show you what I mean by that, why I think it's showing weakness. You know, a week ago or a week and a half ago, Broadcom, you know, said, hey, things are really bad based on the China tariffs and all that stuff. And And that led the tech sector, particularly chips, down. And, you know, they look like they're caught in. There may be some short opportunities, maybe some, you know, some long, but it's an area to look at. Consumer discretionary utility showing strength, energy showing strength. And the FOMC meeting last week gave absolutely no clues, right? Other than dropping one word, right? They're not going to be patient anymore, whatever that means. So there, you know, continued expectation that they may in fact lower rates later this year. In the market like that. So that's kind of the big picture. And then this is a fun, this is a great website if you're not aware of it. Not my website. Mine's great. You should be aware of that. But the spiders. So SPDR, sectorspider.com, they have a series of ETFs. It's probably the biggest, one of the best ETF companies, and they're all focused on sectors of the market, as you can see. And they got this great deal here. You can load how the various sectors did for any given time period. And so, yeah, Jeff said no mention of gold. I did mention very briefly major commodities, and gold's included in that. And gold's on a tear right now. In fact, we're long gold. So what's nice here is I can change these time frames. So let's look at, you know, over the last month, what, you know, wow, things were kind of doing good except for energy. Energy was the weakest sector over the last 30 days. And if I zoom in on a week, it's almost flipped, right? Look how energy, after being pretty weak, is starting to take off. And of course, that primarily led by tensions in the Gulf. But that would tell us that there's an opportunity, perhaps, in energy. This is what I mean by, you know, narrowing our focus down to a particular sector of the market. So by all means, let's look at energy, right? And the other nice feature here is we can go to this energy ETF, XLE, and they're going to tell us what the holdings are, what the individual companies in this ETF. And then we can download an Excel file. We can go grab that list of symbols. And there are 31 symbols in the XLE, or 30, in the XLE ETF. Now I can take those symbols, I can do a little filtering, do a little work here on them and narrow that list down even more. So I've loaded them. This is my platform that I'm using here is TradeStation. And I got some indicators, some data that I can generate. So I've gone ahead and popped those XLE stocks onto this chart. There's a list of other stocks above here I'll talk about in a minute. All right, but let's look at this. And Bill's asking, what time frame do I choose? I start with a daily chart. You know, that's the focus of my stock and option trading is on daily charts. I will occasionally trade on a 60-minute chart for a shorter time frame trade, and sometimes I'll pop up to the weekly to confirm a big trend. All right, so here we are in this energy trend, and I've got some indicators. So I've got the Ichimoku cloud indicators, and it's showing me whether it's in the cloud, above the cloud, below the cloud, whether the trend is up or down. So that's important. And I've got this, you know, the standard 200-day moving average. I got an indicator written here that just tells me, are we above the 200 or are we below it? What percent is price from the 200-day moving average, and how many days has it been above or below, right? And then I've got some other tools here from Traders Coach. But let's focus here on the 200-day and the Ichimoku cloud. So what I'm really interested in is when something new happens. I really want to know when something new happens, okay? And so how many days since it crossed the 200-day moving average? Well, that's important, right? And so we can look at this one, FTI, never heard of the company. It's above the 200-day moving average. It's been above it for 1 day, and it's above the Ichimoku cloud. So that should be kind of an interesting chart to look at. And so I click it, I've got it linked to my actual chart, I come in here and I can analyze it real quick. And here's what I can see. Get my scaling right here on my oscillator. So here's what I see on FTI, and I've already, I can look at a chart in about a second or two and disqualify it or qualify it, whether it's worth looking further at, because I've done this a long time now. But I'll walk you through how I just disqualified this trade. Right? Here's the biggest move. This is, in an Elliott wave. This one conforms. This is an impulsive move. It's a wave 3, right? And here we go. Here's wave 1, 2, 3, right? And so I can measure that, and I can say, wow, after that 1, 2, 3, right? I expect it to retrace into this zone, retrace up between these two blue lines, which are a Fibonacci retracement of 38.2 to 61.8. It's done that. So given this big move and this retracement, the expected next move on FTI is down, and you can see it is approaching this prior high and starting to reverse. So we would not want to go along on this, even though it's above the 200, above the cloud, because of its overall price pattern. And really the expectation is it's going to go down from here once it reverses, and it's going to build some momentum. So again, when I pulled that chart up, I was able to reject it, just see that pattern, but I wanted to walk you through it. So what else did we have there? I'll show you some other ones, because I confess I peeked ahead last night. So XOM, ExxonMobil, actually looks interesting. And that's because the current impulsive move here is up, right? It's up. This is the current impulsive move. That is not, it's been disqualified. And so given this move up, we can do, and it's already retraced perfectly. It did not fail, right? And now we're looking for a next move up into this zone between 61.8 and 100% Fibonacci extension. And so all we need to do is see it break through this 200. Oops, moving the wrong thing. So this blue line, it's just how I annotate. I'm having trouble grabbing it. It's how I annotate my entry. So I'd like to get a good solid close above the 200, and then this red line is my stop. So I would put my stop here under this low, and then this green line would be my target. And my target's going to be in the zone, and it's going to be right at this prior high, because that's a potential failure point, a potential resistance level. Now I look at this trade, and I can just visually see there's a problem. Because if I enter at this blue line, and the red line is my stop, and the green line is my target, those are about 1-to-1, aren't they? I will lose an equal amount if it loses as I would win if it wins. So I want this. I want the ratio of these two to be positive. I want this to be bigger. Because again, to have healthy trading statistics over time, trade after trade after trade, I need my winner to be bigger than my loser, and the potential for them to win has to be big in order for them to be big. So that one gets scratched. Let's look at Chevron. Okay, same kind of analysis. We've got this big impulsive move. We got this correction. We've got a target on Chevron that we are approaching. All right, so our stop would be here at this low. Our entry would be here, current price, and our target is going to be right inside this zone. And you can see, dang it, 1-to-1 again. That one's not good. We'll keep looking. How about WMB? That was on that scan that I showed you. Now this one, same pattern, right? This is the impulsive move. This is the correction. So I'm just going to go straight to my extensions just to get a quick look. Now this one, here's my stop. And here's what's beautiful about this one is it's above the 200-day moving average. If you look at the prior, that goes XOM. It was not yet above the 200, and we were going to wait until it got above that. But here, this WMB Williams Company is already above the 200. Not only is it above it, but it broke above it, and it came down, and the 200 provided really nice support. It's just getting ready to break above the cloud. In fact, it did close above the cloud. And so I could put a stop here where it found support. I could take an entry at current price, and my target is going to be up here. And you can see this prior high is right in this target zone. So we're going to set our target. The target zone is these green lines. We're going to set it conservatively right inside there. Now, you see the difference between this one and the last one? This is the risk between here and here, and this is the reward between here and there. This is like 3 or 4 to 1. So WMB goes on the list. Right? That is a seriously good long trade candidate that I just marked on my notes. And that is one I will be watching very closely Monday at the open and potentially firing off a new trade on it. Okay, so WMB Williams Companies is it's in play, man. It's in play. The next one here was Duke, I think. DK. Okay, sorry. Yeah, same thing. They had a big day on Friday. So let's just do a quick extension on here. All right, so where would our stop be? Right there. That one probably not going to make it. Entry here, target here. So it's just over, right? It's at like 1.2, 1.3 to 1. So I think I like the other one better. If this pulls back for a day or two, it might give us a better entry point. So OKE is okay, but it's not great. WMB was much better. And we're, you know, I'm not going to overload myself in the energy sector. I'll take a max of 2 trades, probably just 1. So I showed you on this chart over here that in addition to scanning the energy sector, I ran a scanning routine that I have that just it goes and looks for breakouts, where it's just something that crossed the 200-day moving average in the last couple days. Because I'm always interested in something new. I want to know when something new happens. And so I ran that scan as well. And I'll show you a couple of the candidates that came up from that. And BB, BlackBerry. So BlackBerry has been in a long downtrend. It had a perfect correction, and now that downtrend is resuming. We got low, lower, high, low, lower, high. It is reversing nicely. It's below the cloud. We could take an entry here. Our stop would be at this high. Remember, we're in a short trade. We're going to flip this around. And we got a target down here. This is about a 3 to 1 reward to risk ratio. We could take BlackBerry down to 672. So BB looks like a really nice short. BlackBerry. Well, they used to rule, right? Back when it was REM, Research in Motion, and everybody had their BlackBerry. Now they're just a services and technology provider. And, you know, they might be doing great, but the chart here, short term, you know, I'm in these trades, you know, between an average 4 to 6 weeks. It looks like we got a good down move coming here on BlackBerry. So SP says with 2 white lines, moving averages, what are they? This is a 200-day. The bold one, the lighter one is a 50-day. I like to keep an eye on them. They're the most popular moving averages on the planet. So I want to know, you know, if other traders are responding to them, I want to know that. And so I combine them with the Ichimoku Cloud and Elliott Wave. All right, so BB looked good. Another one that I found was CAG, ConAgra. So I think we could call that an impulsive move, don't you think? A perfect correction up, starting again. So it's getting ready to resume after that shift in, you know, optimism or shift in pessimism, you know, very pessimistic, huge drop, probably some bad news. Perfect retracement right into this Fibonacci zone. And now, trend change. First we had higher highs, higher lows, higher highs, higher lows. Low, lower high, low, lower high. right? And it's just now breaking under the 200, under the cloud. This is the new thing that is happening. And this looks like it could go down to this prior low. That's at the target zone. So we could take ConAgra back down here to about 20 bucks, just above 20 bucks. And we could get an entry here. And our stop is going to be here, this last high. Look at this reward to risk ratio, man, that is 5 or 6 to 1. It's phenomenal. So that one is cool, right? Jeff says the impulsive moves identify those all wave 3, or does that matter? Are you finding 3, 4, 5? Typically when we come, we see a huge move, that's 3, and that's the one that catches our attention. It's the easiest one to spot. Okay, I'll trade 3, 4, or 5. 5 is actually my favorite. It's more probable. Sometimes we can catch a new 3. Sometimes there's false breakouts though, right? So I've identified 4 trades already, and 2 of those are short, 2 of those are long. Let me show you an existing trade. Somebody mentioned gold earlier. So in my pick service, we are long gold, and we're using Kirkland gold. So we're trading KL as the instrument that we liked. We're in some nice profit on that one. We just got in it on the 20th on Thursday. So Kirkland is in a wave 5 bullish move. So this is all wave 3. Here's the 4 correction. It's heading up, and we got a target at 48.22, and we got a stop here at 35.75. And so the reward to risk was greater than 1. It was about 1.5 to 1, and it's still, you can still get into that one. If it goes much farther, then the reward to risk isn't going to be as good. And if it keeps going up, we're going to trail our stop to this level, right? Manage the trade. But Kirkland Gold, it's a nice play. Gold has been doing very, very well. We found this one as kind of the best instrument currently to trade with. I mentioned before that I thought S&P 500 was showing some weakness, and I'll show you why. I'll use the SPY here, is SPY, the SPY ETF. So although it did put in an all-time high, here's some of these lines, clear things up. So although it did, here was the all-time high, right? And we did close at a new record up here. The next day, boy, it reversed pretty sharply. And one of the tools I use in my trading, I've showed you I use Elliott wave and Dow theory, and you can see the momentum and, Ichimoku cloud, right? Another tool I use is it's an artificial intelligence software called Vantage Point. And what they do is they look for intermarket correlations. So on the SPY, they go look for the 30 markets that have correlation to it. And this is, again, using artificial intelligence. Every day, they go load the data and go, okay, based on the things that have a correlation to the SPY, what they did, what do we think SPY is going to do next? And they're predicting, and they have a pretty good accuracy rate. In fact, you can view it here. This gray bar is the predicted high and low price for the SPY for Monday. Right, so they're predicting a low below Friday's low. So potentially turning over. They got some bearish momentum, and they actually plot what that historic predicted. This red line was a predicted high, the black line was a predicted low, and you can see they were predicting highs and it was going up, right? And they were predicting lows and it was going down. And it's about 87% accurate is what they claim, and I've found that to be true. So anyway, I don't want to make this a Vantage Point essay, just other than they're predicting, artificial intelligence is predicting that the SPY is going to go down on Monday. And I think after this pretty long run up, we should expect at least a short-term pullback. So we got some long candidates in the energy sector, which is going the other way, but being short on other things kind of makes sense. So we've identified 5 candidates, right? We got BB short, CAG short. We've got in the energy sector, we've got WMB and OKE long. And Barak said, hey, can you quickly look at, explain WMB again? Yeah, so WMB, this can't be the impulsive move because this retraced too high. So this is the impulsive move. This is the correction. So this is 1, 2, 3, 4. Now we're in 5. So that's the quick thumbnail analysis on Williams Company. All right. So we got 5 trade candidates, and then I've also got a watch list of other candidates I've accumulated. And what I'd have here is the list of trade ideas and some notes and trigger levels and what we're waiting for. And there's another trade here, GE. We're about to go long on GE because it just broke out of this channel on Friday. And you can see how long it's been in this channel, how many times it hit this upper boundary since March. And now it's breaking out and something new is happening. So we're interested in taking a long on GE. So there's 6 trade ideas that we've covered here, okay? So yeah, take a few minutes. If you have any charts, I can take a handful. I probably won't get to everyone, but if you got some ideas, shoot me a couple symbols there and I'll analyze your ideas. Nicole says, how do you decide if you're going to buy a stock or option on a ticker? My first choice is always an option. So I do my analysis on the chart here. I come up with my entry, my stop, my target, and then I go looking for the best option contract. And most cases you can find them. Occasionally there'll be some tickers that don't have a good option market, then I'll trade the shares, but options are my first choice. Okay, RDUS for Mike. Now I'll do about 5 of them, and then we're going to have to go, unfortunately. So Radius Health, hey, this looks pretty good actually. Let's get more history. Look how far this has come down. You know, it's important if you're going to analyze a trend. I always say this in my training materials. You got to go find out where it started, right? And so in order to find this trend, we have to go look back into 16, right? And this trend started down in 2016, and it is now beginning to retrace. And so the retracement zone is between, you know, about 31 to 40. That's the retracement zone. Now this thing's moving kind of slow, so you have to give it time, right? But there's good evidence that retracement is underway, right? Because we've got higher highs, higher lows, higher highs, higher lows. It's above the cloud, it's above the moving averages. You've got a moving average crossover. You've got positive momentum. So that looks good. You know, it's not a fast mover, but it looks like it's going to inchworm its way up into this target zone. So that's not bad there, Mike. Gene, TOC. I don't know if that was a comment or a symbol, but TOC did not work. Dan wants Etsy. Etsy has been in a beautiful uptrend, right? Uninterrupted. So this is all wave 3. Now we're seeing some weakness, right? Remember, it put in higher highs, higher lows, higher highs, higher lows. This move did not put in a higher high, and it took out prior lows. So it's showing signs of getting ready to reverse and go down. And the target for that would be down here between 50 and about 35. But I would wait until it goes through the cloud. Let it get through the cloud first, and then you might have a short opportunity on Etsy. I would not go long, my take on it. Mark MPC. Marathon Petro. So here's the move down. Then a retracement up. We got a target up above 60. In here, I would let it get through the cloud, get through that 50, let the momentum shift. So we found some better energy plays than Marathon. It does look like it's getting ready to reverse, but it's not quite ready yet, in my opinion. KR from Manish. Kroger. You know, a regional grocery and variety store here is Fred Meyer's, and they're part of Kroger owns them. It's a great store. You know, they've been around since I was growing up, and it's just a great store. But this is not a great chart. This is one where I said, if you try to apply Elliott wave rules to every chart, you're going to be frustrated. This one's chaos. Look how it gaps and how it makes big moves and then retraces, and big moves and retracement. It's chaotic. And it gaps on news all the time. I would not touch it. There's more orderly, more predictable charts out there. Okay, I'll do two more. And Gene, it was TDOC. All right, Teledoc. Teledoc, what a funny name, right? Okay, this looks like a nice wave 5 starting. And, you know, we got the impulsive move, we got the correction. That looks like it's getting ready to head up. And so, Teledoc, let's just do a quick extension analysis on it. Got a nice target up here above 90 bucks. And it's just now, it hit the cloud before, and now it broke through it. So I'm gonna, that's a nice one, Jean. And Jean's a customer. She's been around with me for a while, so she knows what I'm looking for. You knew I'd like that one, didn't you, Jean? All right, one more, and it's I'll go with Stig. There wants to look at Halliburton. So he said it looks like it's alive after a long slumber. A long slumber, Jay. Looks like it's finding a bottom, but it has not proven that that's going to go anywhere yet. I would let this cloud thin and let it break through. I think our other energy plays, WMB and OKE, were better. All right, well, that's all I'm going to be able to do. We're getting close to the end of the hour there. And Jeff says, are there any special settings to configure the cloud indicator? I do have some proprietary settings for the Ichimoku cloud here. I'm going to tell you how to get them in just a moment. All right. So let me start to wrap things up here. So we identified some pretty good candidates, right? So finding great trade candidates is like a needle in a haystack, but hey, we found it, right? I think we found some good ones there. And we got BB short, CAG short, WMB long, OKE long, GE long, TDOC looked like a good long, and I told you that Kirkland Gold was still a good looking trade. So we found some good ones, right? Again, these things are essential. You got to have great trade setups, high probability outcomes, good reward to risk ratio, risk management, trade management. You guys agree? If you have these things, you have a good shot at being a profitable trader. Then there's a raise your hand button. Go ahead and click that button. If you agree, or just type in a yes, that having these things will get you on your way to being a good consistently profitable trader. There we go. People are raising their hands. Thank you. All right. How many of you excited about the trades we just looked at? I think they have some potential there in BB, CAG, YY, WMB, OKE, etc. Anybody liking those? KO, TDOC. All right. A little unsure about what to do though, how to act on it. Well, maybe feel like this dude, right? It's like, wow, that was a ton of information in a short period of time. Well, I'd like to spend a few minutes going over an offer. I said I would at the end here, related to what we just talked about, how you could participate. So remember, finding trades is hard, and once you find them, you need to have a plan. You have to got to have great trade setups. You got to have risk management. You got to have trade management. And then you got to step through these things. So I have a stock pick subscription service. Got customers who give me nice comments all the time. And what's something like that worth, right? Well, historically, if you were trading this, even with a $50,000 account, you're making an average of about $2,000 a month, $1,900 a month. You get over 10 hours of detailed trade consultation in my trading room and in my chat sessions. To go buy that from a world-class trading mentor, it's going to be really expensive. You get one-on-one consultation with me as part of the package. That's expensive. To go buy it by itself. You get ongoing education. I provide tools and training with my service. You total this stuff up, and you're looking at over $5,000, right? And so I'm going to offer you all of this in my service. Great trade setups, risk management, trade management. Up to 10 hours of trade consultation per month. You get a one-on-one consultation, you get ongoing education tools, you get access to and help with winning trades. And it's not going to cost you $5,000, right? The list price for the service, 127 bucks a month, 1,524 a year. It's a good value at that price, but you can try it today, 30 days for $37. So you can take a 1-month trial for 37 bucks. And I'm going to get you that link in the chat box. Here we go. There, the link is posted. All right, so you get to try the thing for a month for $37, and it's 100% money back. So try it. Most people do, and they stay and they like it. You know, for some reason you didn't have time, or just, you know, it didn't fit what you're trying to do. You just shoot me a note, give me a call. 100% refund, no questions asked, no hard feelings, right? But, you know, I want people who stay with the service to totally be comfortable and, you know, happy with it, and most are. Okay, and after the 30 days, it renews at 97 bucks a month. And by the way, if you take the trial, you're going to be given an offer there to go ahead and sign up for an annual subscription if you want at an incredible discount. So that'll happen. So there's the link, and you know, here's everything you get with this service. You get the watch list of potential trades that I've found. I just showed you over here on TradeStation. I generate a watch list of potential trades. I'm going to add today's to it. And so you get a watch list. You get alerts, email or text message when I'm getting into a new trade. You get the exact detail of the trade, entry, stop, target. Most trades can be traded either with shares or with options. You take your choice, right? I provide an option contract that I'm going to trade it with that meets my criteria. So you can trade shares, you can trade options. You get alerts, email or text when I make a change, move a stop, take profit, close a trade. You get access to a live trading room. We're open. It's actually an hour. We've changed it at the market open. You can attend if you like. It is not required, but you're absolutely welcome. And you know, we're doing kind of like today. We're looking at trades, scanning the market, answering some questions, a little training, and looking for trades. And then sometimes we pull the trigger on right there in the trading room. If you don't attend, you get an alert, right? We're going to send you a message if we're taking any trade. You get a weekly live chat on Wednesday evenings. You get one-on-one consultation with me, and you get some risk management, option trading tools, and trading. You have access to all that when you subscribe, and it's all on the website and organized. And I kind of give you a couple of videos, walk you through everything. You get ongoing support and training, and there's more. People asked about the Ichimoku cloud settings. If you take the trial today, I'm gonna bundle and give you the Ichimoku cloud course. So I have a course. It's my proprietary cloud setting. It's a written study guide. It's got training videos, and there's a printable trade setup cheat sheet. So if you take the trial today, and here's that link again, 37 bucks for 30-day trial to the stock picks. I'm going to include this Ichimoku cloud course, which lists on my website for $247, and it's good value at that. So there's that, right? That's a pretty good offer. You get 30-day trial and you get the Ichimoku cloud, 37 bucks. It's only available during this session. So once we hang up, the offer's over. I'll send out a link with the video recording of this thing, but at that point, you just get the 30-day trial, which is still a great deal. But if you sign up now during this session, you will get the bonus of the Ichimoku cloud course, $247 value. Jincy is asking, do I mention which trades are best for options or stocks? So all the trades I publish, I think are great trade candidates. And it's your choice whether you trade it with stocks or options, right? Over time, those will kind of net out. So it really depends on your preference, right? Your capital, what you like better, right? Whether you trade it with stocks or options. And Scott is saying that the master course is invaluable. Well, thank you, Scott. You made that a private comment, so if there's something you want to say for people to see, got to flip that address bar. Okay, any questions? I've really covered we identified some great trades. That was the main objective here, and I've walked through that offer. I'm happy to field any questions that you have, and I'll hang out here. But hey, thank you. It's second day of summer. It's a beautiful day in most places, and you guys chose to spend that time with me, and I'm honored. And I hope you found it to be valuable. Hope it was worth your time. Whether you take the offer or not, I hope you learned something, got some ideas, and really glad you were here. And again, I'll hang out. I'm going to go on mute for a minute. I'm going to catch my breath and have a cup of coffee, but I'll answer any questions and hang out. Again, you take this offer. Having the Ichimoku Cloud bonus is only good while we're online here, and then it's gone. All right, I'll go ahead and stop the recording now too.